We've got some major news coming out of the European Union that's reshaping the crypto landscape. The EU has approved 10 companies to issue stablecoins under its new Markets in Crypto Assets framework. But this regulatory move, while groundbreaking, comes with a host of challenges and aims to answer questions like, what does this approval mean for the future of stablecoins in Europe, and are there hidden hurdles that we should be aware of? Let's take a deep dive. First things first, let's unpack this MiCA framework approval. So the EU's decision to grant approval to 10 companies to issue stablecoins is a landmark moment in the regulation of crypto assets. This move is significant because it marks the EU's commitment to ensuring stablecoins operate within a clear regulatory framework, offering both consumers and businesses some much needed clarity. And among the 10 approved companies, we've got major players like Circle, who are the issuer of USDC. You've got Crypto.com, which has been making waves in the global crypto space, and Société Générale, which is a French banking giant. And these firms are now authorised to issue stablecoins pegged to fiat currencies like the euro and the US dollar, and that's where the opportunities and challenges begin. Now, notably, these stablecoins have a big role to play in the future of digital currencies in Europe, especially as more and more businesses are turning to stablecoins for seamless cross-border payments and financial services. But here's the twist. Tether, who is the issuer of the widely used USDT stablecoin, is notably absent from the approved list. So why is that? Well, Tether has been one of the most popular stablecoins globally, with USDT being the most traded cryptocurrency by volume, and its exclusion has sparked a lot of debates about the EU's regulatory approach. Experts have pointed out time and time again that Tether's absence could point to the complexity of the EU's regulatory environment, and the MiCA framework is designed to make sure that stablecoins meet specific requirements related to things like reserves, transparency and consumer protection. And it's clear that Tether might not be in line with all of those requirements, at least not yet anyway. So while the EU's decision to leave out Tether could signal tighter regulation, it also raises questions about whether the current MiCA rules are actually too restrictive for global players. And could this exclusion push companies like Tether to rethink their operations in Europe, or will they eventually, adapt to meet the requirements? Now let's dig into the pros and cons of MiCA, because while some are applauding the EU's decision to regulate the crypto space more clearly, not everyone is on board. Because on one hand, MiCA is bringing much needed regulatory clarity to the European market, and it's a positive step for businesses who are looking to establish themselves in Europe, because it gives them the confidence to issue stablecoins and operate within this sort of well-defined legal structure. And of course, it's a win for consumers too, because as the regulations are aiming to protect them from the risks associated with unstable or fraudulent stablecoin issuers. But, and it's a big but, critics are arguing that MiCA's regulations could stifle innovation because the compliance burden is hefty, and companies are going to have to meet specific capital and reserve requirements. They're going to have to provide clear auditing of their stablecoins and adhere to strict reporting standards. And excessive regulation in Europe can ultimately hinder economic growth, especially when it's compared to other regions with more relaxed, shall we say, regulatory frameworks. So could these new rules push crypto companies to look elsewhere? Well, a lot of people think so. And MiCA's actually already having an impact on the behaviour of the crypto market. When we look at what's already changed since they've been implemented in the crypto space, we're already seeing a kind of a fallout from the introduction of these regulations. Several platforms have started delisting Tether, You've got other stable coins as well that are not being included because they don't meet the MiCA standards. And it might sound like a natural consequence of new regulatory frameworks, but it's also causing a lot of disruption. And Tether has actually been vocal about these delistings, calling them premature, insufficiently explained, I think I heard them say as well. And then it's just the beginning, because as more platforms comply with MiCA, we'll probably see even more stablecoins taken off the market. So the question is, will this drive up demand for the approved stablecoins like USDC and others, or is it going to force European firms to just go elsewhere, basically, and look beyond the EU to more crypto-friendly jurisdictions? And speaking of looking beyond the EU, let's talk about what's happening across the English Channel, because many crypto firms are eyeing the UK up now as a potential safe haven. But don't get too excited. Things are still uncertain on that front. Since Brexit, the UK has been working on its own regulatory framework for crypto. And while there's been some progress, the regulatory uncertainty post-Brexit is still a major factor. And many crypto companies are finding it difficult to plan their future operations with the UK's shifting stance on regulation. So while the EU may seem like a tight regulatory environment and difficult to work within, the UK isn't necessarily offering a clear alternative. And so that is leaving crypto firms in kind of a tough spot, really, whether to stay in the EU and face the challenges of MiCA compliance, or risk moving to less regulated markets where they can operate more freely but with more risk. Now, looking ahead, the future of stablecoins in Europe will likely be defined by how well companies adapt to MiCA. The regulatory framework has the potential to provide stability, I would say, but it can also create obstacles for innovation if companies find it too burdensome. MiCA, it's still in its early stages, and we could see adjustments, here and there as regulators continue to try to fine-tune the rules. But the big question is, will MiCA be a model that other regions follow? I think it will. Or, will it end up as this sort of cautionary tale of over-regulation? So where does that leave us? Well, MiCA's approval of these 10 companies is a big step forward, but with regulation comes a whole new set of challenges. And as crypto firms navigate this, what we can call a regulatory maze, I will be here to bring you all the updates. Let me know your thoughts in the comments below. Do you think that MiCA will be a boon for Europe's crypto landscape, or will it drive innovation away? Don't forget to like, subscribe and hit that bell for more updates from me. I've got you covered with all the latest crypto regulation news. I'll see you in the next video.